Markets can often be really confusing. That's why we use the cheat sheet. Row 1 to row 7 gives us a really good idea of what's happening inside the markets. The reason that we look at the cheat sheet is because the chart that you put money into is moved by other charts, and the cheat sheet covers those key charts that you need to look at. Let's go for it, and let's run the numbers. Just a quick piece of housekeeping before we get into it. Many thanks to all the hundreds of people who registered to get the Profiting from CTKS Method Structure course absolutely free. I'd like to thank everybody for their comments, and I'm integrating those questions and comments actually into the course, so the course will be delayed. I'll keep you updated. Now, let's get into it. A big, warm, happy Thanksgiving to our Canadian CTKS family. We must be always mindful to do CTKS structure first. We need to just look at where the structural levels are, unless we just want to guess. When it comes to price, everything moves from a structural perspective. So what happened in the S&P 500 in the past trading session? Okay, let's pop on the indicator and see what's cooking under here. You can see this structural level of resistance at 58.68. That was a pretty telling level of resistance. We literally came up to there and then started to fail through level after level after level after level. Even this 58.25 level didn't hold price. So what was actually occurring is that the institutions induced people in to buy because it went green, and then it trapped them on the wrong side of the trade and the wrong side of the percentage, unfortunately. What about the NASDAQ? What did we see there? When you understand that structure controls everything inside financial markets, it's an absolute game changer. Just let's have a look at it. What we can see around that 18,540 level, so much structural overhead resistance. It came up so fast it couldn't digest correctly, and it was plummeting down. And unfortunately, just that 18,410 level is quite an important level of structure, and we are below it at the current time. So we're expecting major weakness in the indices at the current time unless they turn around. Let's have a quick look at the Dow. What happened with the Dow? We saw it came up, and boy oh boy was it crushed, but it reversed very, very quickly. What does this mean from a structural perspective? Well, we saw at the 43.90 mark, there was a real big level of structural resistance. We came up to challenge it, and guess what? It got whacked. But where did it get whacked down to? The 42.810 mark. This is why you need to know where your ceilings are and where your floors are. Currently, we're seeing an underside retest of that 42.810 level and a resumption down. The reason that we look at structure, it's so utterly important. We saw a similar thing, that 22.73 mark on the Russell. Came up, challenged it, died. And of course, this particular level, 22.57, is really important. Note that there is quite a lot of structural support underneath the Russell. Therefore, there is a safety net. Okay, let's look at total crypto market cap and see what happened when that fingerprint was playing out across all markets. Okay, let's pop on the indicator. Now, what we saw here was total crypto market cap had so much structural resistance in play. It had a barrage of it. And we also know that the major indices' upper structural levels were actually tested and retraced from. So what does this mean? The market is trying to get through resistance, and it failed this particular time, but it doesn't mean it's going to fail again. So we failed here, but look at how structure caught the price and rebounded it back again. Now, what are we noticing? Here's something that I was pointing out when we went through the charts. In terms of total crypto market cap, we are seeing some signs of strength, but above is a just thermonuclear barrier. It's going to take a lot to get through there. And we know that we have to read Bitcoin and total crypto market cap together. So what was happening structurally with Bitcoin? And what do we notice here? a sign of life. If we can get above there and maintain that, especially getting above that intermediate short term, where a lot of retail traders and investors will look, that's a good thing. They'll see that as very positive. But we actually need to see where the real levels are, and guess what? It's not that level. The level of resistance is around the base of that move, not on top of it, as many people would think. And there's no resistance above there, it's actually there. Knowing where your actual resistance levels are is incredibly important. And we can see this 66,050 level actually caught Bitcoin and saved it. When we draw all of these threads together, what are we seeing? We're seeing that the markets upwardly tested resistance levels and didn't have a very good time doing it. They got pulled back. We're seeing a degree of strength emerging inside the crypto market, which actually is reflected in the Russell 2000 futures as well at the current time. Now we have to grind up here if we want to create a bullish case. A bullish case will be reinforced with a movement above 67,550. A bearish case, what do the bears want? They want to break this 66,050 level and push it down. They are the two key levels that you need to keep your eye on in the next 24 hours. There are 7 rows within the cheat sheet. Row 1 measures risk-on or risk-off sentiment. Row 2 confirms it. We've been seeing some pretty interesting behavior inside row 1. In the past 24 hours in the last session, the VIX started to spike, and that threw a bit of a spanner in the works, not just in crypto as we would expect because it's so risk-on or risk-off, but so too across the entire market. But an interesting thing, the VIX was spiking up, yet the dollar did a little bit of a rally but then pulled back. Now why is that important? Because if there's true risk-on behavior, people throw their money into the mattress under the bed. That's the DXY. Now why have we got this other thing here? Dollar yen. What is that to do with? Well, we're trying to figure out if people are pulling their money out of the market as the VIX spikes. Is it going into the DXY? And the US dollar currency index is influenced by the other forex pairs, such as dollar yen. What do we see here? Dollar yen did pretty much the same thing as the DXY. So we're not getting a widespread flight to safety, but there is a crack emerging in the market. We'll get to that in later rows. Now, why do we look at US 10-year and the US 2-year yield? Why is this important? Because the 10-year is like your mortgage rate. The 2-year is like your savings rate. Now, what does this mean? If these rates are going up, you have less disposable income. Your interest payments become more and you get less out of the bank at the same time, in relative terms. But what we're seeing here is that the rates are decreasing. This generally pushes more money into the economic system, and that's a pretty good thing. Oil can be very geopolitically focused, and we've seen oil come down recently as some tensions in the Middle East have eased, but who knows for how long. What the key thing is to look at right now, the VIX has started to spike up. We need to figure out if this is a continuation, if it's going to keep on spiking, because that could put negative pressure on the major indices, stocks, commodities, and also crypto. That's the thing that we need to focus on today. Okay, let's look at row 2. Row 2 also measures risk-on and risk-off sentiment. Typically, when markets are humming along, the relationship between different charts tends to just consolidate, but we're not seeing this. Unfortunately, at the current time, the markets are a little bit all over the place as they try to figure out what the heck is going on. You must be comfortable with uncertainty inside financial markets, but the concept is that the junk bonds give a very good risk-on or risk-off indication. When the US 2-year and the US 10-year go down, we expect gold and silver to keep on going up, and also continuously gold is being referred to as the baby brother of Bitcoin. Or more so, Larry Fink, chairman and CEO of BlackRock, is going around saying, Bitcoin, that's better than gold. That's as good as gold. That's gold. So a lot of people that were not interested whatsoever in the crypto space will suddenly become interested because Larry is talking about it. And what we've noticed here, copper is going down. This doesn't bode well for China especially. It kind of looks like their stimulus has failed. Looking at the major market indices is really important. Here we're looking at the S&P 500 over the past trading session. What do we notice? A lot of volatility. God blimey, look at the NASDAQ. It really sunk. Look at the Dow Jones. It sunk before everything. Literally, it just went cratering down. And that particular point is just around this point. So it's good to realize that in this case, the Dow threw a warning signal across the S&P 500 and the NASDAQ. Dow theory often is credited for doing things like that. When looking at the Russell 2000, the Russell 2000 is very closely associated with movements inside the crypto market. And we've seen a little bit of weakness when it closed out. And look at this upward and downward volatility. The up and down volatility inside crypto was caused by the main markets. Just something to keep a note of. The S&P 500 was sold down as the markets closed and the NASDAQ was bought up. Row 4 seeks to triangulate Row 1 and Row 2 and Row 3. And what do we notice with Apple? It's a large consumer leading stock. Look at that, just push up inside Apple and then the push down, the sell into the close. What about Tesla on the NASDAQ? We're seeing a very similar thing, but a bit of a divergence here. Tesla is currently weak. What about Microsoft? We can see all sorts of things happening. For example, look at how liquidity was brought into the system and Microsoft and Apple and unfortunately Tesla just rallied a bit, but it faded really fast. There's a lot of sellers inside Tesla. What about Nvidia? That also spiked up. If you're looking at Bitcoin and also crypto, you can use it to predict movements inside the stock market and vice versa. What's pretty interesting here is Microsoft was bought into the close, Apple was sold into the close, Tesla was kind of neutral, and Nvidia was sold into the close. What we're doing here is basically stacking probabilities. As the crypto market trades 24 hours a day, 7 days a week, it's a pretty damn good market because we can understand what could happen with the stock market when it opens. And that is something that you need to do if you're in the equities market or you're in the bond market or, of course, in the Forex market. In row 5, we look at total crypto market cap, Bitcoin, Ethereum, and Bitcoin's equity cousin, MicroStrategy, MSTR. What we can see is the same kind of pattern playing out again and again and again. A big boost up, and you know that Apple was going for it, Microsoft was going for it, Tesla was trying to go for it, but just the sellers were too strong. Nvidia was trying to go for it, and guess what? Also MicroStrategy. But just like Tesla, look at that weakness. It came in hard. Now, if you were a MicroStrategy investor and trader and you were looking at this, you could have told before Bitcoin started to crater down that Bitcoin and the entire crypto market could be really quite weak because of this association. MicroStrategy is a good thing to keep on your radar. We can also see that Ethereum is just a tad weaker. Now, why is it weaker? If we just look just here, which would be just here, look at how Ethereum is substantially lower. What about MicroStrategy? Substantially lower. When you're doing the cheat sheet, you want to also gauge strength and weakness. And inside the masterclass, there's a very good lesson on the professional advisor that you can apply across any chart. Make sure that you just revisit that. It's also helpful to put particular price movements into some kind of sequence. And when we look at Bitcoin, we can see that it's starting to get above a level of resistance. This is really good, but it's not above this one. The 68,286 is a critical level for Bitcoin to get above, confirm, and go for it. But we can see on the monthly chart that Bitcoin is actually doing quite well. Now, will the main markets bring Bitcoin and stop the crypto party, or will Bitcoin go forward? Please let me know your thoughts inside the comments. And you can see US liquidity is starting to come back into the market. Now, why does this occur? When US liquidity comes back into the market, it's typically because the Fed has broken something. Now, what does this mean to us? When we see US liquidity tending to spike up, especially after coming down, it can foretell a little bit of negative price action. Unfortunately, a lot of people just flee on the red. This is exactly the times that you want to get in. Everybody says, I want to buy the bottom, but nobody is there when the red action comes. Please make sure you're there. Instead, what typically happens is people get drawn in on the green, and then markets correct and they sell. So it's like buy here, sell here, buy here, sell here, buy here, you get the idea. You don't want to do that. It simply doesn't work. You have to invert your thinking. Looking across global markets, we can see that China is indeed under some degree of stress. It's done one heck of a rally, stimulus-led, but the stimulus-led rally is bleeding out at the current time. But we can see a lot of the other markets are just doing normal retracements. If we get a retracement here, it's pretty normal. It's not a sign of any crash or anything, just at the current time. Going into row 6, we're looking at confirming signals all over the place. Litecoin and Bitcoin Cash are cousins to Bitcoin. Binance Coin is an exchange token, and Ethereum Classic tends to hang around and monitor the movements of Ethereum. So Bitcoin and Ethereum is the focus for this specific row. And look at this big arc up here. It was pointing towards a recovery. This is very, very interesting. We're seeing some divergence. This often happens before things turn around. So you must keep your eyes not on the charts that you're putting money into, but just all of the tiered charts, because they will throw signals to you. Remember what MicroStrategy was doing with Bitcoin. Bitcoin Cash is not confirming Litecoin's breakout, but that is pretty interesting stuff. What about BNB? BNB is just following the gravitational pull, and when we get substantial sell-offs, things tend to realign. Things can be out of whack before a sell-off, and then they can come back into harmony. And often the markets need this harmony to actually reassert itself. What about Ethereum Classic? Ethereum Classic is not looking too bad at all. It might be in the starting phases of a little bit of a recovery rally. It all depends on your time frame. This is why it's important to look more deeply, so we'll look into row 7, which is ADA, Solana, Doge, and XRP. And we can see the familiar thing just playing out just with ease on every single chart. As Bitcoin goes, so too does the entire crypto market. And what are we seeing right now with Solana? A sign of strength. Litecoin was picking it up. What about ADA? Still under pressure. What about Dogecoin? A sign of strength. What about XRP? And XRP was absolutely whacked in the past trading session. It's still under pressure. There are so many ways that we can look at the market. When we look at order book, we can see around that 69,000, there are a lot of sellers there, but there are also buyers around the 66 mark. At the current time, the order book is explaining that buyers think that they can get lower prices. For such a big movement inside the market, we didn't have that many long and short liquidations. They were kind of balanced. Of course, more longs were liquidated, which explains the downward price momentum, around 327.35 million. And remember, yesterday there was a record inflow on the spot Bitcoin ETFs. Let's have a look at those. One thing to keep in mind, Bitcoin and crypto is starting to show really good signs. They could turn around and it could fail, but it's looking increasingly like crypto is about to break out. That doesn't mean that you should just go all in and more. It just means that you need to be aware of it. In the past 24 hours, we saw about $556 million worth of inflows into the spot Bitcoin ETFs. The day before that, 253. So that's quite a lot of money. And so far today, 21.4 million. But today is early. It's also important that you keep your eye on what's changing with the federal funds rate. Currently, there's a 9.4% that nothing happens with a rate cut in the coming FOMC meeting, which is about 23 days away. Now, the thing to note was it's 16.4% yesterday. It's pushed down to 9.4. Now, what does that do to the dollar, to the yields? It pushes them down, and therefore it pushes risk-on behavior up. In other words, this thing coming down pushes row 1 down and row 2 up. There was an 83.6% probability of a 25 basis point decrease yesterday. That's become 90.6%. So we're expecting a 25 basis point decrease in the federal funds rate. That will lower the DXY, the dollar-yen combo, US 2-year, US 10-year, and that's pretty good for risk-on behavior, so long as we don't get a hard landing. And by the way, people don't expect that to occur. The economic data that came out yesterday was the Empire State Manufacturing Index, which registered one hell of a contraction. It was supposed to be previous, it was 11.5, they forecast 3.4, it was literally negative 12. That could have been one of the things that shocked the market. And when we look today, there's nothing going on. But tomorrow we get core retail sales month on month, retail sales month on month, unemployment claims, and the Philly Fed Manufacturing Index. It's important to keep a really positive attitude inside the markets. We can see ENA and WorldCoin were doing pretty well. And now storage, the Filecoin ecosystem, is starting to come up. But we can also notice SUI and WIF are on the lower bank. Different ecosystems will behave differently, and when we're looking at the Ethereum ecosystem, Beam is out of front, doing not too badly, WorldCoin down the bottom. Inside RWA, real-world assets, pretty much everything has been hit. What about gaming? Yeah, that's been hit as well. Ray is not doing too badly inside the Solana ecosystem. And inside the service, Litecoin is doing pretty damn well. What about AI and big data? Ouch, looking pretty sick. What about memes? They've been hit as well. But look at this standout behavior by storage. Typically, when you see one come up, you could expect the others to come up as well. Always remember, there are always opportunities inside every market. And when we look at the wallets, we can see TWT Trust Wallet is whacked. What about DeFi? Well, Radium and Jup, not doing too badly. Maker just getting whacked on the bottom there. In Deepin, storage doing well, Note Storage and Sia Coin. We may see Sia Coin coming up in the next 24 hours. What about Binance Labs? Kava is up the top, Mavia down the bottom. Centralized exchanges, nothing really happening there. What about the DEXs? Radium doing nicely. What about the Bitcoin ecosystem? Oh, Bitcoin Cash leading up the bottom of the pack. Layer 2, Metis is going for it. One thing that we know, when we look at this volatility, we know it was not confined just to crypto. It was confined to all of the markets, all of them. Everything got hit. Therefore, we need to expect volatility in the next 24 hours. What about the past 24 hours in terms of the greatest gainers? Mu just meowing its way to the top. Litecoin, HBAR, Chiliz, Phantom, Athena, or ENA, and Beam and KuCoin token. What about going the other way to the greatest losers? Coin market cap, get it together, man. Look at MOG, Brett, Popcat with SEI, Nero, and Conflux. and SUIs come back into alignment. Hopefully what you're noticing here, the meme coins were rampaging recently and it's changed across to file ecosystems. So distributed storage, okay, keep that one in mind. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And the secret word today is gratitude. There's always something to be grateful for, and of course, a very happy Thanksgiving to our Canadian CTKS family. Bye for now.